Welcome investors! Today we'll talk about stop loss order because under my last video about energy fuels I have very interesting comment. John B said, I watched yours and Trader 21 videos about energy fuels and I bought energy fuels for $1.52 per share and I set the stop loss at $4. Price drop until $3.99 and then it dropped me out. Stop loss dropped you out, John B. That's nice that you put me next to the Trader 21. He has a real knowledge and I watch him as well, and full respect to this what he is doing, but I'm nowhere near him. I am 100% amateur. He's 100% professional. So let's see what they are saying in Investopedia about stop loss order. Most investors can benefit from implementing a stop loss order. A stop loss is designed to limit an investor's loss on a security position that makes an unfavorable move. One key advantage of using a stop loss order is you don't need to monitor your holdings daily. A disadvantage is that a short-term price fluctuation could activate a stop loss order and trigger unnecessary sell. Let's elaborate more on this last point a little bit more, and let me give you the example. Almost 2 years ago, pandemic, Disney stock dropped 41% from January 3rd to March 20th, 2020. If you had a stop loss order set up as they recommend, usually 15%, you would sell the Disney, which is a great company. What was the reason for this drop? Fear of unknown. There was no inherent problems going on with the Disney company. We have the virus scare coming from China and the news spread immediately all over the world and the stock dropped 40%. It's amazing. There's no problem with the company. There's nothing going wrong inside the company. Fundamentals are strong. Just external news going all over the world affected the stock. Stop loss order in this case is useless and you're gonna lose the money like you did with energy fuels. I give you my opinion about stop loss. Personally, I don't use a stop loss. Why I don't use a stop loss? Because the market, stock market, is not 100% automated. It's not 100% computers. It's not 100% algorithms. There is a human element. And as long as there will be a human element, all kinds of automation, all kinds of putting the algorithms in the stock market are not going to work really well. Probably you know about this, that 80% of all trades going on the stock market are algorithmic. And because of this, we have the huge drops in the market like we have 2 years ago when the Disney stock dropped 40%, where there was nothing wrong with the company. This was triggered by algorithms because they gather the news from over the world. They process all this information and make a decision. They make calculated decisions. But remember, investing is not 100% calculated, cold-blooded mathematic algorithm. There is a human element. There are emotions involved. There is a human nature involved. And as long as there will be a human nature involved into investing, I'm not going to use the stop loss. If I used, I would sell all my Disney stock. My stop loss would initiate the sale of Disney stock. Instead of this, I didn't sell, and I enjoy almost 100% increase in my Disney stock. That is my take on this. I know that there are some people who are going to argue that algorithms have advantage over the humans. You know what? I'll give you quickly the answer to this, why I don't want to use any algorithms. First of all, I don't understand them. Second of all, I'm very simple investor. I stay away from something which I don't understand. That is my reason. I don't understand this, and I'm not taking the risk of this. But I deeply understand this human nature part of investing. That's why I stick with this side. I don't stick with mathematics side of investing because I don't understand this part deeply. And in this case, like you saw, the stop loss took you to nowhere, made you sell the stock for $4, and the energy fuel stocks as of today is $8. So I would tell you to kind of look at the investing as a broader picture. If you want to implement some stop loss orders, look at them maybe from different perspective. Don't set them up for 10-15% how they recommend. Set them up much deeper, I would say, like a 30-40%, especially with the companies which are very stable, because they're not supposed to go that low. But it does happen on another side. I gave you an example in March 20th, 2020. So it's a tricky situation, and like I said again, I'm trying to stay away from any kind of automation of my portfolio. I don't use any stop loss orders, and I very rarely trade, buy and sell any stocks. Last time when I was buying the stocks was a year ago, when I was buying the energy fuel stocks. I don't trade very often stocks, buy, sell. I do some research on the stocks, like I mentioned a couple of videos earlier. I have on my radar stocks from defense industry, and I'm planning to buy them, but I'm waiting for this moment. I'm waiting for another crash on the stock market. And I'm not waiting for 1 day crash, 2 days, 3 days. I'm waiting for something what happened 2 years ago during the virus situation, when straight 2 weeks we have stock market going down. Some days more than 10%, to the point where the trading was halted, was stopped. So that's the moment which I'm waiting. And I don't have to watch the news, check the stock for this every day. Occasionally I turn on NPR and I know what's going on around the world, because 2 years ago I was listening to NPR, and then they were saying, oh wow, stock market dropped 20%, another day 10%. You know what? That will be a sign for me to open the computer and start loading on my favorite stocks from the defense industry. Otherwise, I don't follow on a daily basis the stock market. Recently, I think today, my wife told me that there is some news about the war possibly happening between Russia and Ukraine. I didn't even follow the feed. I didn't look into internet or TV what's going on, because I don't want to worry unnecessarily. I don't want to unnecessarily pollute my mind with all these informations. I'm just gonna wait. If something happened over there and there is a conflict and other countries get involved, stock market is gonna tank. That's gonna be a great time to buy. Of course, don't take me wrong. I don't want this war or any war to happen because I don't want any people to die. But unfortunately, we live in the world when there is always, and there always will be in the future wars, conflicts. People will be killing each other. That's unfortunately our nature. So anyway, coming back to the stop loss is a good thing to be victimized, like someone also commented under my recent video. So if you want to be a victim, use the stop loss. That is my take. Okay, thank you so much for watching this short video. If you like it, give me a thumb up. If you disagree with my point, write me down the comment. I would like to hear from you. And like always, subscribe to the channel and share this video all over the world and spread the word about very simple investing channel on YouTube. And recently I also started the website verysimpleinvesting.com. There is a couple posts, you can go and read them, and there is some info about me. I'm gonna be putting more and more info on a regular basis. Thank you so much again. I really appreciate your time. Have a great day.